Alright, what's up YouTube? I know you've seen a company that, the stock was up 70%. This is Esperion. And pretty much what happened Friday is that, the company got hit on news that really didn't affect them. So a lot of people were scrambling, trying to get that sell button and, hurry up and panic selling. And, the stock dipped down to $20. And once it dipped from $20, it just took off there and it went past 24. After it went to 24, it kind of leveled off. And, that was kind of, the end of the day. And then on today, they released some pretty good news that got investors confident in the stock once again. And as you see, the stock ran up over 100% just about for 2 days, or 70% for just today. So good news makes the stock go up. Bad news makes the stock go down. That's, plain and simple. So when we think about Micron technology, we're thinking about what's going to break this thing past 30. So you've seen the company already pre-announce their earnings. They're saying, okay, we're going to do good for the quarter. We're beating the estimates that the analysts have set out. Now, when they report, they have to come out with something amazing to wow investors to break this thing past $30. The stock is already past 25. That's a 25 handle, which means that the pre-announcement to earnings broke the thing past $25. Now, what investors are waiting on is that they're waiting to see if this move was actually justified. And they can actually justify their moves with just looking and seeing what, Micron is actually going to produce to them. So if they actually came out and said, we did really good, but at the same time, they show any type of negative news in that in their earnings report, you will see this company stock get checked below $25. So this company stock is only moving past $25 because they came out and pre-announced that they're going, that they were going to have a pretty good quarter. So that's pretty much what you see there. The pre-announcement got it past 25, and we're going to wait on the earnings result to get it past 30. So that's pretty much what's happening there. Also, one amazing company that the stock really doesn't move around much is Nike. So as you see, the company's stock has tried to get past that $60 level. And as you see, it's got checked down at least twice so far. And what this company stock is doing, when it hit that $49 level, people were saying, okay, Nike has gotten too low. Let's start getting positions in right here. And then once it starts getting closer to that quarter, or when it has to report, that's when you see the stock will start to rise up. And once you see the stock starts to rise up, the rise up will only be justified if the company can produce a pretty good earnings. This goes the same with all stocks. If you see a rise before the earnings report, it will only be justified if the company can actually produce a pretty good quarter. Remember, a pretty good quarter, not bad guidance. It want to have good guidance and a pretty good quarter. So if Nike does come out and say, okay, we beat estimates, we're going to see a really good guidance for this year, the stock breaks past $60. But if you see any type of negative news to this stock or to the report, this stock will get checked back down, and we will start back trading at the range Nike did trade at last year, which is a very boring range, and you really don't want to be in a stock unless you just want to collect the dividends. So the company stock is rising up only on the belief that the company is going to produce a pretty good quarter. So let's get that understood. These stocks do rise up if they have some kind of assumption that the company stock is going to do pretty good. Now, if you do see a company stock that does go down before the earnings, I suggest you may want to get a position in on there, because people are already pricing in the negative news or the negative report that will come out with that stock. So remember, we want to watch the price movements for the stock. When we get close to earnings. Sometimes even if a company stock is down before they report earnings, that could be a positive signal for you to go ahead and buy some shares, because they're already pricing in the negative results that the company will produce if they actually do produce some. So you're always looking for ways to maximize your upside, and I suggest you definitely wait on this trade, because you really don't know if Nike can actually justify these moves. A lot of people are really confident. They bought Nike at $49. Now it's at $58. People might be looking to take some profits here if they do not beat the estimates. And you might get those people who are longtime shareholders who are saying, okay, I'm tired of this. This company stock has not broken past that $60 handle. I'm done. So we have to look at all factors that that attribute to breaking out of small ranges. So take care, guys.